company decides who can build the future and who can't. Most investors think semiconductors are about NVIDIA or TSMC. They're wrong. Because behind every advanced chip, there's one company no one can replace. If you invest in AI, tech, or long-term compounding, stay with me, because one number here explains why ASML is unlike anything else in the market. ASML designs and builds the most advanced lithography machines on Earth. These machines are not optional. They are mandatory. Every cutting-edge chip you care about depends on lithography, and for the most advanced nodes, it basically depends on ASML. Their clients include TSMC, Samsung, and Intel. So the winners of semiconductors still rely on the same supplier. Now, the business model is what makes this stock special. ASML doesn't sell volume. It sells precision, complexity, and time. Each machine can cost hundreds of millions of dollars, takes years to build, and once installed, it creates long-term recurring revenue from services, upgrades, and maintenance. So, it's not just a one-time sale, it's a relationship that lasts for decades. And that's why ASML feels like infrastructure, not a normal industrial company. Now look at the stock price over time. You can see how the market treats ASML. It moves with the semiconductor cycle. Yes, but the long-term direction is clearly up, because each wave of technology requires more advanced tools, and ASML is the bottleneck. Now we move to revenue. What I like here is the trend. Revenue grows over the long term, even if it's not perfectly smooth. That's normal in semiconductors. Orders come in cycles. But the key is that every cycle tends to reset higher, because the world keeps demanding more chips and more advanced chips. Now net income. Net income follows revenue, but you'll usually see it react more sharply. That's because profitability can swing based on product mix, timing of deliveries, and how much spending ASML puts into R&D. What matters is that the company remains structurally profitable and margins stay high for an industrial name. Now, free cash flow. This is the slide that tells you if the business is real. Free cash flow can be bumpy because ASML reinvests heavily and builds extremely complex systems. But overall, it stays strong. And that's a huge green flag. It means this company can fund innovation and still generate real cash for shareholders. Now, operating margin. For an industrial company, these margins are impressive. And margins here mean one thing: pricing power. ASML can charge premium prices because customers have no real alternative for leading-edge lithography. That's not normal. That's dominance. Earnings per share have a clear long-term upward trajectory. That tells you ASML is not just growing sales, it's growing shareholder value. And when EPS trends up like this, it usually means the moat is working. Let's be honest, ASML is not cheap. The PE ratio is usually at a premium because the market knows this company is strategic. So the question isn't, is it cheap? The question is the moat strong enough to justify the premium? And for ASML, the moat is literally technological. Now dividends. This is not a high-yield stock. The dividend is more like a signal of financial strength, not the main reason to own it. You buy ASML for compounding, and the dividend is just a bonus on the side. Long-term debt exists, but it's manageable. With ASML's cash generation, the balance sheet doesn't look fragile. This is not a company surviving on leverage. It's a company investing to widen the gap. Now, here's what I consider ASML's biggest strengths. First, near monopoly in EUV lithography. There is no serious competitor at scale. Second, massive pricing power. When ASML raises prices, customers pay because they have to. Third, the barrier to entry is extreme. Replicating this would take decades, not years. But it's not risk-free. The valuation is a risk. Any slowdown can hit sentiment fast. The semiconductor industry is cyclical, so orders can come in waves, and geopolitics matter. Export controls, especially involving China, are real and ongoing. These risks don't destroy the thesis, but they can create volatility. I am a shareholder of ASML, For me, this is not about hype. It's about control. I don't see this moat disappearing before 2050, possibly longer. Asml is a strategic asset, a long-term compounder powered by AI, advanced computing, and technological barriers that are almost impossible to replicate. This is not financial advice. Always do your own research. If you enjoyed this breakdown, like, subscribe, and comment which stock I should analyze next, because some companies follow the future and others build it.